Hello, good people. So, in this video here, I'll be explaining how I use my correlation in order to avoid taking trades that are going to be in a losing side. So, obviously, I use my correlation numbers here, and I make sure that I do not trade a strong group versus okay, let me rather say I don't trade currencies that are inside the strong group together. For example, I won't be trading the US dollar versus Canadian dollar, or the AUD versus Canadian dollar, or AUD USD, because the market is going to range or it's going to kick me out. It's going to hit my stop loss. Okay. Same thing here. I won't be trading NZD versus the euro, and same thing applies here. Okay, so I don't trade currencies that are inside one group. Okay, so for example here, let's look at these currencies. As you can see, the the euro is -5, which means it's selling. Okay, and also the NZD is also selling with -7. So if you pair two currencies that are trending to the downside or are trending into the same direction, you are going to find a range. Okay, so as traders, me personally, I really love to trade with a trend. I need to see the direction and then follow the big banks or the market makers. Okay, so let's use an example of euro AUD just to show you how I avoided trading this currency pair here, euro NZD. Okay, this is the euro NZD. We are going to start breaking the market down from the higher time frame, which is in this case is the daily time frame, and we are going to, okay, so obviously I marked my key zones: support here, resistance here. Okay, and you can clearly see that the market is choppy here, meaning that it's ranging, but inside this choppiness movement, you can spot, trends. You can go into the lower time frame, maybe H4 or H1, to see the trends. As you can see here, we've been getting a buy trend, and here we got a sell trend, and here I was expecting a buy trend, and I'm pretty sure that most of the people, they bought here after they've seen this break and retest. They were expecting a continuation, but me, I was aware that because the market is selling into the same direction, then this thing is going to range, or it's going to break to the downside and leave a week, and break to the upside and leave a week again. So I was aware of that. So let's go back. So most of the people, they trade like me based on the technical analysis, but when it comes to knowing the direction perfectly, then I can say that they do not know, because they don't have the data from this thing here, and they also don't have the data from the news. That's why they mostly take losing trades. Okay, they randomly take losing trade, but me, I make sure that I avoid taking that losing trade. So this was a clear break and retest. Okay, here the market was going down, 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 and then we saw a breakout, breaking this trend line. Okay, and I was also looking for a buy, but in this consolidation here, I was still looking for a breakout followed by a retest, retesting this resistance zone, bullish engulfing here, and then so that I can buy. And also this setup was also lining up with the fib zone. Look at this, 50% or 61.8%. So this was a perfect setup based on the technical analysis, because when the market came here to the 50%, it rejected, and made a bullish engulfing. In most cases, the trend I mostly buy, and put a stop loss below the 61.8 and below the rejections. And TP, first TP could have been here, and the second TP could have been here in this next zone. As you can see that the market here, it made a reversal here, it made a small support, and then that is going to be our TP2. And if we are looking for TP3, this could have been our TP3 here, because remember on the daily time frame that the market is making a range, okay, a range. So whenever it comes here, it's going to bounce in this support. Okay, enough for technical analysis. Now let's go back into the sentiment of the market. So now we knew that the direction is up, but these numbers, both of these numbers were selling, okay, were selling, meaning that we can't take a trade if our correlation numbers are moving to the same direction, okay. We can rather take a weak currency versus a neutral currency, okay, or a neutral currency with a strong currency that is going to give us a trend. So that's why this setup didn't work. This setup didn't work, okay. The market is going, currently it's breaking, but it won't be breaking and going down like making a new trend. It's going to continue making a range, okay. It's going to make a range. Okay, now let's talk about a trade that I took this week, which was a winning trade, obviously, because I make sure that I take only setups that are going to work into my favor. Even if I take one trade, that is going to be fine, because I do not want to lose. Okay, so based on the technical analysis, this was a very nice setup. Market is ranging on the daily, but here it's buying, here it's selling, here it's buying, selling, buying, selling. Okay, so we're looking for a set here. Okay, let's zoom into the H4 like this. So when the market broke here, as the market was buying, I've seen the market breaking, and then it came to this support here, and it bounced again, and then I was expecting to see another break, because I've seen that the at that time with this push here, the euro was getting weaker and weaker and weaker, okay. But when we got a pullback, then the euro was neutral. But we've seen that on the other side that the Canadian dollar was strong, okay. So let's look at our correlation numbers. Okay, let's start looking let's look at the date. It was the 28th of September. 28th of September. So these numbers, I give them on daily basis on my groups, okay, on my groups for free. 28th September. Let's look at the Canadian dollar. Canadian dollar was bullish with +7. +7 is a very big number that tells us that the market is still going to buy, okay. And then on the other side, the euro was neutral. That is also fine when we pair a neutral currency with a strong currency, because we know that we are going to find a trend, obviously, okay. A trend with a very nice pullback, okay. So okay, bye. Okay, let's go back. There's something that I need to explain here. I remember, if we pair this with this, the euro is going to be on the left hand side, okay. The euro is going to be on the left hand side, but the Canadian dollar is going to be on the right hand side. That means the graph on itself is going to represent the currency that is on the left hand side, meaning that we were expecting a downtrend, not a buy, okay, not a buy, because this one was neutral and this one was strong. So if this one is strong against this one is going to go down, meaning that if you are flipping this, if you are taking the CAD into the left hand side, you are going to see a buy trend. Okay, I hope everyone is familiar with that, because most of you know technical analysis. Okay, so we got a breakout here, a break of this big upward channel. Okay, ascending channel. So we got a breakout, but it was not an enough breakout. This one here, this big impulsive move, because it came back to the support. Okay, but this one was enough to tell me that the market is going to continue selling. Okay, and I was waiting for a pullback, came to the previous support, which is visible nicely on the H4 and H1, and then I was expecting reversal candlesticks and obviously the high of the day, so that I'll be selling without gambling, because sometimes you need to wait for the high of the day, to wait for the market to complete the day, the uptrend of the day, and then sell when you see that buyers are done. As you can see here, the market went down. Okay, these are day separations. So the day opened here, and then market went down and made the low of the day. I was still waiting for the market to go up and complete the move. Okay, so a completion of a move, you must wait for the market to make something like this. So let's say you are watching this, you must wait for the market to come to the previous support here. Boom, 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 boom. And when it's here, you must expect rejections, okay, or M setup, okay, M setup or rejections. But in this case, we got both of those things. We got some sort of rejections, which is also some sort of an M, and then I got in here stop loss above. Okay, stop loss above, and then TP to the next zone, which was 2.6R. Okay, 2.6R. Okay, risking it 1%, but aiming 2.6. Okay, depends on your account size. So that was a very nice setup based on the technical analysis plus correlation. So correlation is just giving us a direction of the market. It's just making the last confluence that for sure the market is going to go to the downside. Even if you, let's say you took a very early trade, a very early entry, you are going to make money eventually, as long as your stop loss is bigger, because the market is still going to go into a direction, even if it's pulling back, aggressively, but it will go down eventually. So that's how I make sure that I pick highly accurate setups by just looking at these numbers. Okay, these numbers here on daily basis. For example, here let's look for a setup that could that didn't work. This one here also, USD Canadian dollar. Remember, both of these are bullish. So if you pair them together, there's a high chance that you're going to see a range. There is a high chance. Okay, USD Canada, USDK. All right. Okay, the H4, we've seen that the market was down, and then you saw something like a breakout. So me, I was expecting a pullback to this zone, to this previous resistance here, so that I'll be able to do what? To buy after this bullish engulfing. I hope you can see this bullish engulfing here. But the market was, the market was willing to make a range here because both of the currencies are strong. Okay, so whenever you are pairing a strong versus another strong, the market is going to range. A weak with another week, market's going to range. Neutral versus neutral, the market's going to range. Okay, so this is a cheat code of the market, especially if you are trading the currencies, because with currencies you are going to be pairing two currencies. You are pairing one versus maybe with another one. Okay, so it's not like indices whereby it's just USD or the S&P 500. This is just currencies. This thing moves in pairs. If the other one is bullish and other one is bearish, then you are going to see a clear trend between those currencies. Okay, so that's how, guys, I make sure that I don't just jump in and take any trade, because this thing gives me directions and then I follow the trend after I've spotted the direction of the market. So I hope you enjoyed this video. Please make sure that you like the video if you did enjoy it, and make sure that you subscribe if you are new in this channel, because there's a lot to come. Yeah, I'm out, guys. Take care.